This video is a review of Mitsui Fudosan's fiscal year 2024 full-year financial results, period from April 2024 to March 2025. Mitsui Fudosan is one of Japan's largest and most influential real estate companies. Founded in 1941 and part of the Mitsui Group, it develops and manages office buildings, shopping centers, residential properties, hotels, and logistics facilities. Mitsui Fudosan is known for major urban projects like Tokyo Midtown and Nihonbashi redevelopment. Financial highlights for fiscal year 2024. In fiscal year 2024, Mitsui Fudosan revised up forecasts, but were able to exceed the upwardly revised full-year forecasts for all levels from operating revenue to net profit. Mitsui Fudosan hit new records highs in each of operating revenue, operating income, business income, and net profit in fiscal year 2024. Revenue was 2,625.3 billion yen, up 10.2% year-on-year. Business income, which is the combination of operating income and gains and losses on the disposal of tangible assets and equity method investments, was 398.6 billion yen, up 15.2%. Ordinary income was up 8.4%, and profit attributable to owners of parent was 248.7 billion yen, up 10.8%. For operating revenue, this is the 13th consecutive year of new record highs. For operating income, ordinary income, and net profit, these results represent the third consecutive year of new record highs. Consolidated income for fiscal year 2024. For fiscal year 2024, Mitsui Fudosan achieved year-on-year growth in business income across all segments. In particular, for each of the core segments of leasing, property sales, management, and facility operations, they achieved new record highs. Leasing segment. Business income was 176.4 billion yen, representing a year-on-year increase of 4.3%. And business income reached new record highs. This was driven by GMV, gross merchandise value growth at existing retail facilities, as well as revenue and profit gains from domestic and overseas office properties, including Tokyo Midtown Yaesu, which began operations in fiscal year 2022. As of the end of March, Mitsui Fudosan's non-consolidated metropolitan area office vacancy rate stood at 1.3%, an improvement of 1.2 percentage points from 2.5% at the end of December. Additionally, sales at existing retail facilities grew to 105% year-on-year. Property sales segment. Business income reached 167 billion yen, representing a year-over-year increase of 23.6%, a new record high. This growth was primarily driven by increased income from property sales to domestic individuals, reflecting progress in unit handovers at major developments, such as Park Tower Kachidoki South and Mita Garden Hills. The total number of condominium and detached housing units sold was 4,110, an increase of 410 units compared to the previous year. The average unit price rose to approximately 100 million yen, up by more than 15 million yen year-over-year. Near-term selling conditions remain strong, and inventory levels are at record lows, supporting continued robust performance in this segment. Management segment. Business income in this segment was 71.6 billion yen, representing a year-over-year increase of 8.1%. This marks new record highs for both revenue and profit. In the property management subsegment, business income showed a slight year-over-year decline. This was mainly due to improved occupancy rates in the Repark car park leasing business, which were offset by increased expenses related to system upgrades. In the brokerage and asset management subsegment, business income increased year-over-year. This growth was driven by higher unit prices in the retail brokerage business, Rehouse, as well as an increase in AUM, assets under management at Mitsui Fudosan's sponsored REITs and other investment vehicles. Facility operations segment. This segment recorded business income of 38.6 billion yen, marking a substantial year-over-year increase of 46.6%, a new record high. The strong performance was driven primarily by a significant rise in ADRs, average daily rates in the hotel and resorts business, where business income surged by 120%. The sports and entertainment business, centered around Tokyo Dome City, also reported a 104.8% increase. This was supported by an increase in both operating days and visitor numbers at Tokyo Dome. Summary of consolidated balance sheet. In fiscal year 2024, Mitsui Fudosan's total assets reached 9.8 trillion yen, an increase of 370.3 billion compared to the previous fiscal year end, with 284 billion of this growth attributable to foreign exchange effects. Interest-bearing debt stood at 4.4 trillion yen, a slight decrease of 14.3 billion yen, despite a foreign exchange impact of 82.7 billion yen. Net assets rose to 3.2 trillion yen, up 36 billion yen from the previous fiscal year end. Due in part to the impact of foreign exchange, Mitsui Fudosan's total asset value has been increasing. The value of prime land in Tokyo remains high and is in a favorable condition. FY2025 forecast. Mitsui Fudosan forecasts business income of 425 billion yen for fiscal year 2025, an increase of 6.6% year-over-year, and net income of 260 billion yen, up 4.5% from fiscal year 2024. Despite challenges such as lingering effects of the pandemic on certain properties, high interest rates, cap rates, and global economic uncertainty influenced by recent U.S. tariff policies, the company has factored in some expected losses as a precaution. Nevertheless, driven by strong domestic property sales, solid management operations, and anticipated growth in facility operations, the company expects to achieve record highs in operating revenue, business income, and net profit. Progress of the group's long-term vision. Mitsui Fudosan achieved an EPS of 89.3 yen in fiscal year 2024, a 13.7% increase from fiscal year 2023, and targets approximately 94 yen in fiscal year 2025. ROE improved to 8.0% in fiscal year 2024 and is expected to remain in the low 8% range in fiscal year 2025, progressing toward the fiscal year 2026 goal of 8.5% or higher. The DE ratio, debt-to-equity ratio, remains stable at 1.4 times. Mitsui Fudosan continues to reduce strategic shareholdings, with a 23% reduction as of fiscal year 2024 and a cumulative reduction target of 40% by fiscal year 2025. Shareholder return highlights. Mitsui Fudosan has decided to raise the full-year dividend per share by 1 yen, from the previously forecasted 30 yen to 31 yen per share. This decision reflects that net income exceeded expectations and aligns with the company's and Innovation 2030 policy, which targets a dividend payout ratio of around 35%, including the 45 billion yen share buyback program announced on February 7th. The total shareholder payout ratio for fiscal year 2024 amounts to 52.7% of net profit. For fiscal year 2025, Mitsui Fudosan forecasts a full-year dividend of 33 yen per share, based on a projected net profit of 260 billion yen and a payout ratio target of 35%, an increase of 2 yen compared to FY 2024. Mitsui Fudosan is also putting strong emphasis on shareholder returns, and since its business performance is solid, it has been increasing its dividend every year. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 1,364 yen as of May 23rd, and the US dollar stock price is $28.52 as of May 23rd. Current PBR is 1.2, and PER is 14.5. Dividend yield is 2.42%. Compared to the past few years, PBR and PER indicate that the stock price is relatively high. However, like many other Japanese companies, Mitsui Fudosan has continued to increase its dividend payouts, resulting in a current higher dividend yield compared to the past. Conclusion. In fiscal year 2024, Mitsui Fudosan achieved record highs across operating revenue, business income, ordinary income, and net profit. These results reflect solid performance across all core segments: leasing, property sales, management, and facility operations, driven by factors such as higher property sales, strong retail and office operations, and a rebound in tourism and entertainment. The company is also conducting share buybacks and continuing to increase dividends for shareholders. Despite external challenges such as global economic uncertainty and high interest rates, the company forecasts continued growth, with expectations for record high business income and net profit, supported by ongoing strength in domestic real estate and disciplined financial management.